Let me just say, I thought that the Federal Reserve's white paper on housing was very thoughtful, very analytical, and non-prescriptive, which is appropriate. I think also, thinking back, such an analytical paper might have been extremely useful to us in 2005 or 6 or 7 to alert policymakers to developments within the housing market that proved to be catastrophic. And the final point, I think, is that it is fully consistent with the enhanced responsibilities under the FSOC that the Federal Reserve must display. So on all those points, I think it was appropriate. One of the issues that was raised in the paper, and which you might elaborate on, is that there are short-term programs that might, in the long term, produce more returns, enhance value to the government and taxpayers. But if they're not pursued, even if there's a upfront cost, that ironically, we could have even a further deterioration in the profitability, assets of these GSEs. Can you elaborate on that, Mr. Chairman?
Certainly, and I'd like just quickly to mention to Senator Shelby, who asked about this, that the speeches given by Governors Duke and President Dudley are their own recognizance. They don't represent official Fed positions, and of course, as you know, Fed members often give their views, their own individual views. Sorry, Senator Reid. One point that we make is that in a typical negotiation between a borrower and a lender, a modification or some other arrangement like a short sale or a deed in lieu, for example, or other activities like REO to rental are typically taken on a narrow economic basis of the benefits of the lender and the borrower, which makes sense in a free market economy. But in the current situation, I think it's important at least to recognize that the problems in the housing sector, including massive numbers of foreclosures, uncertainty about the number of houses coming on the market, whole neighborhoods with many empty houses, all of those things have implications not only for the borrower and the lender, but also for the neighborhood, for the community, and of course for the national economy, because the weaknesses in the housing market, again, as I mentioned earlier, are slowing the pace of the recovery, and from the Federal Reserve's point of view, are probably muting to some extent, the impact of our low interest rate policy, because low mortgage rates don't help if people can't get mortgage credit. So some of the benefits of actions to improve conditions in the housing market go beyond just those of the lender and the borrower and accrue to the broader society as well.